So, you kicked off your loan pre-approval. Woohoo! Soon you'll know how much you can borrow for a home. While those numbers are still crunching, why not put the term in determined and decide what kind of loan feels right? There are all sorts of options. And deciding on the right one is a little bit math and a little bit gut. It basically comes down to understanding the difference between a fixed-rate mortgage and an adjustable-rate mortgage. A fixed-rate mortgage is pretty straightforward and simple to factor into your budget because it carries a steady rate in payment over a certain number of years, which is called the term. In general, the shorter the term, the higher the monthly payment. The longer the term, the lower the monthly payment. On the other hand, a shorter term could save thousands of dollars in interest compared to a longer term. So it's a good option if you can swing it. Now this is where all the great mortgage calculators on summitcreditunion.com come in handy to help you zero in on your house payment sweet spot. An adjustable rate mortgage, or ARM, is a different type of loan, where you could get a lower interest rate and lower payment to start out. But once the initial term is over in, say, 3, 7, or 10 years, the rate adjusts, and so will your payment, based on market conditions. Since there's no way to predict what rates will be at the end of the initial term, you have to be comfortable with the fact that your mortgage payments could go up. An ARM can be the right option for getting into a home affordably, especially if you don't plan to stay in that home beyond the initial term. If you're thinking about an ARM, be sure to talk it through with your Summit Mortgage Loan Officer before making the final decision. They can help you weigh your options. If you're considering having a new home built, there's a special loan for that. Our construction loans are designed so your payments are for interest only during the construction phase, and Summit pays your builder as the work progresses. While your home is being built, you'll have lots of decisions to make, including whether to convert to an ARM or a fixed-rate mortgage once your home is complete. Lots to think about. And as you crunch away on the calculators, be sure you're thinking about the down payment. Increasing it can have a considerable impact on your monthly payments. And know this, many first-time home buyers are eligible for assistance with down payment and closing costs. Ask your Summit Mortgage Loan Officer or learn more about it on our website. Any way you crunch it, your mortgage payment will be part of your budget for years to come, along with your other expenses. So you want to make sure it's one you can live with comfortably. But making house payments instead of rent payments, that's definitely worth a little happy dance. Up next, budget for being a homeowner. Don't spend it all on the house.